Hey, y'all, wanted to give you a quick update on the market shift. We're seeing a shift, and today we're going to talk to you about what we're seeing and kind of a projection on things to expect and to be prepared for.
Yeah, Scott, as the Fed's going to probably come out today, lower interest rates. We don't know if it's going to be a quarter point or half a point, but we're finally seeing the interest rates kind of target in a downward trajectory, which means there's going to be some refinance opportunity upcoming, as well as you're going to have folks who've been in their home now for the last couple of years that have been hesitant to move up or downsize, put it on the market because of the interest rate environment. So I think you can see a lot of activity by the end of the year and first part of next year.
I agree. Well, let's kind of dive into interest rates. You mentioned that they're on their way down. Feds are expected to reduce rates here today, so we should know tomorrow what their decision is, whether it's a quarter or a half. But either way, rates are way better than what they have been for the past 2 years. And one statistic I want to talk about is the consumer debt on a national average is it's much higher than it's ever been. One topic of conversation I'd like to discuss is now a good time to refi. Obviously, as it applies to just your mortgage rate, yes, more than likely rates are a good bit better than where you locked in at if you purchased a home in the past 2 years. Looking at a refinance is a good idea. But if you've been in your home for a while, and even if your interest rate is lower, in the threes, but your consumer debt is really high, looking at a blended rate synopsis with consolidating debt in with your mortgage could be a huge offset to your monthly payment and savings. And then you can take your savings and apply it to principal reduction. And really, at the end of the day, save yourself a lot of money and eliminate all the additional monthly payments that you're paying,
Yeah, and I think you kind of hit the nail on the head. Right now we are seeing consumer debt, let's call it credit card debt, and even some auto debt. Auto loans are a lot higher than they were a couple of years ago. But we are also a very equity rich nation, and that kind of goes hand in hand with what you were talking about. Is if you've run up 10, 20, $30,000 of credit card debt, consumer debt, and you're paying 18 to 25% for it, you now may have a great opportunity to refinance at a lower rate. Now, we're not at the bottom yet, right? We probably, still anticipate over the next year, 18 months, we're going to get at the bottom, but you could refinance now, restructure that debt, save probably a ton of money on your monthly payments. And then as we follow the market and the interest rates go down even more, hey, you could jump right back in and refinance again to make sure you catch the bottom of the market. Therefore, you're retiring that high rate credit card consumer debt and maximizing and utilizing your equity to your advantage.
Yeah, and look, one thing I'm going to bet a lot of people don't realize is credit card rates are sitting at 20% plus, right? And that is a revolving debt, so that's accruing interest upon interest. It's not simple interest, right? And then car loan rates over the past 2 years have gotten to be very expensive. I've seen minimum 7 to as high as 10, 11% on these auto loan rates. So by consolidating this debt into one payment is going to be much more or much less stressful and much more affordable. And then you have this excess in savings you can apply towards your principal reduction, or you can put it back into your savings to get your savings account back up. So I do expect that refis we're going to start to see a lot of refis here shortly. And reach out to us if you have any questions. We'll do a cost benefit analysis. We've got an incredible software that will give you a insight where you can look and see what your options are, what your savings are, and what your reinvestment could look like, depending on if you applied it towards principal reduction on a new mortgage or if you applied it to some other account, if you will.
Yeah, and the best thing about the cost analysis, if you are dabbling, you have some credit card debt. Scott mentioned the revolving credit cards. Sometimes they're 20, 24%, and then you just find yourself kind of in that credit card death spiral. You just can't make any headway. And what a lot of people don't realize, and this is where our software and our technology can really help you as the consumer make the best decision, is we can do a complete analysis on your current debt structure. And a lot of people think, Scott, hey, if I got to refinance, that means I got to go back out to 30 years, or I got to suck it up and go to a 15-year, but then my payment's going to be too much. And what they don't realize is we can get you an odd term. I'll give you an example. Let's say you bought a house within, let's say 2 years ago, and you're close to 7.5, and you did a 30-year fix. Well, we could come right back and we could look at a 23, a 25, a 26, 27-year term to expedite your term, not take you all the way back to 30 years. And by paying off some of the credit card debt, and man, if you have a car in your debt cycle, we can reduce your monthly payments just astronomically, kind of get you set right, watch the market over the next year or so, and then hopefully get you refinanced to hit rock bottom. A lot of people will say, well, man, there's so many costs involved with refinancing if I do it, a couple times over the next couple years. Well, that's the best part about what we do here at New American Funding is we have a rate guarantee. If you come back to us on a refinance within 5 years, we'll waive your lender fees. We'll even give you a $500 credit for the appraisal. So we're going to make the cost impact of refinancing a lot smaller than most lenders. Therefore, we have your best interests at heart.
Yeah, and kind of going into with us being in the business together over 50 years combined, is choosing the right loan officer. Too many times I've talked to people, and the one common thing, the one theme that is very common that my clients will say to me is you've given me more information in 5 minutes of conversation than I've gotten talking to however many people or this person for the past 2-3 weeks. And that's how we set ourselves apart, is not just on bringing you, our experience and knowledge, but also put ourselves in your shoes as a consumer to make sure that, look, we're going to present you with all of your options, help go over them so you as a consumer can make the best educated decision on what's the right plan for you and your family. And choosing the right loan officer, that's a big deal. If you're going through a transaction and you're unsure of something, or you don't know what to ask, these are things we think of when we're communicating with you to help. Okay, what is your wants? What are your needs? What's your desires? What are you looking for? And these questions help us help you in providing you with the right data so you can make the best decision with the refinance or for a purchase that fits your needs.
Yeah, it's got, with both of us being, what are we combined now, 51 years in the industry. So, hey, we're kind of the old guys on the block. And what you said really kind of pinpoints what we do well is, a lot of people in our loan officers in our industry, they're basically order takers. And they think they've got a 15-year fixed or a 30-year fixed. Well, that's not the case. You come talk to a professional like ourselves, we're going to give you options. Think about it this way. You walk into an ice cream shop, and they say, do you want vanilla or chocolate? Well, that doesn't really help accomplish your goals. We're kind of like Baskin Robbins. Was it 31 flavors, I think, that they market? Hey, we've got so many different programs. We want to listen to your needs, and we want to customize that program that fits your goals, because ultimately we need to make raving fans out of our clients.
Yeah, we want to see repeat business. Typically our closings are less than a month. And that being said, we want to set the platform that your experience is so memorable that you think of us when it's time to refinance down the road or purchase a new home. My favorite saying is, if we see you at the grocery store, we don't want to duck and dive behind the aisles. We want to shake your hand and ask you how you're doing. And that's what you get with us. And I want to switch topics real quick. I want to go into the purchase market right now. We're seeing a lot of inventory hit the market, right? And so with this inventory increasing and rates dipping, we're going to start turning into a more competitive market. Right now, it's more of a buyer's market. So if you're looking to buy, right now is the time to buy. Sellers are more willing to work with you. But as these rates decline and the market heats up, what's going to happen is going to turn back into a seller's market. So there's some time here that you can get into the market now and get the home at a good price, at a discount maybe, or have additional concessions from the seller to pay some of your closing costs or all, and help make it more affordable for you. And a lot of people don't know this. You can still do 100% financing. That's out there. So you don't have to put down 20%. A lot of people still think you do, and you don't. So if you're looking to purchase right now's the time to do it.
Yeah, and I think as we continue to see these interest rates tick down, like we talked earlier, going late this year, early spring, you're going to start seeing a lot more movement. And when we get that movement, people are going to be wanting to sell their houses because let's face it, you got a majority of Americans are sitting in a 2.5 to 3.5% interest rate. They weren't willing to give those up when the rates were 7.5 or all the way up to 8. But now that they're going to creeping down, and I think realistically we can see mid fives, by this time next year. They've been in these homes now for 3 to 5 years, so this property may not suit their needs. So they've been kind of itching to make a move, and they haven't been able to convince themselves psychologically to give up that lower rate. But once the rates go down, then I think that they're going to hit the market. And once there's more properties on the market, more movement, that's going to probably move your pricing up because there's going to be more demand. And that's why what you said earlier is so important is, man, if there's a time to buy, I would say it would be in the next 60 to 90 days. That's if you can find the property that you want. Don't settle. And we've talked several times about some niche programs we have, like our NAV Cash program, where we can make an offer on your behalf and get you in the house. You can move in, get the house of your dreams, then you can list your house. Because the biggest fear right now in the market is, hey, if I list my house, if you have a good property, it will go quick. What are you going to do? Is there a property on the market that meets your satisfaction, or are you going to have to settle for something? So again, that goes back to our total analysis. We have programs for you so you don't ever have to settle for a house again. You can get the home of your dreams.
Yeah, I agree. And just to kind of finish up and touch on, the all cash buyer program you just mentioned, this is an absolute game changer to the real estate industry. The real estate industry's never seen a program like this. And this program is absolutely bulletproof. The fact that you can now, if you're selling a home, right, to buy, most people are not going to accept a predicated offer, especially if your house isn't already under contract on the one that you're vacating. With our all cash buyer program, this completely changes the playing field, that now if you're selling to buy, you get approved with us up front. Within a few days, you could be looking at homes, and then once you find the home you want, you're putting in an all cash offer, non-predicated on the home that you're vacating, which gives you the ability to get a way more negotiable offer put in because it's all cash, non-predicated. And then the convenience of being able to move in right away and then go list your home for sale. And, we hadn't really touched on this in some of our videos, but once you list your home for sale, on that day you go to close on that home is when we transfer the property back to you. And you can use some of the equity or all the equity out of the vacating home to put down on the new one. Again, game changer to the industry. This program was created by us here at New American Funding, and we're extremely excited, as you can tell, to have this program because once you've experienced the program, whether you're a buyer or whether you're a realtor, this is going to really blow your mind and go, oh my gosh, this is a product that is absolutely incredible and very prudent to having a transaction not fall through because of other predicated offers. It eliminates a domino effect. So look, if you're looking to buy or you're looking to refinance or you're looking to consolidate some debt, give us a call. We'll hear you out. We're going to be asking some questions because we want to make sure we get you in the right product.